Okay, hi there, guys. Hope we're doing well, and you can hear me loud and clear. Just trying to tempt myself away from intraday trading. So these streams are very good for my psychology. Oh God, hard going. Who have we got on today? Let me just check a few things while I'm waiting around. Uh, okay, look, I'll just assume that I'm coming through okay. Looks like the sound's good. It's buzzing away. So welcome to Trade Setup live stream. It's the 16th of March and another volatile day. So we saw the markets. I just want to talk about, well, let me just take one step back. I want to talk about today, and you can see on the screen now, well, that's not the actual ASX one, but the massive short squeeze that played out on Friday afternoon. Just dip into that a bit, and then you can see the same thing happened on Saturday morning, early Saturday morning, when, let me just check something, when the US is about to close. So really, really strange stuff. They didn't go through, eh? I'm a genius. Let me just start something now. Looks like I didn't send the alert, the push notification, and it's just struggling to get through. There we go. Should be up and running now. Why isn't mine coming through? All right. Anyway, g'day, Lauren. I'm guessing you saw it off the internet. I just realised that not too many people in. It's probably the push notification didn't go through. Anyway, they'll start logging in. So I'll just recap what I was talking about. I want to just go over is just a short squeeze and what we're looking for, just the basics. I mean, a lot of people were talking it's a great buying opportunity. Saw talk everywhere on Friday afternoon. You've got to remember that when the market's heading south and everyone knows about it, everyone's got the position short or they're out. I mean, you get the crazies who would just start to chip in long, like myself. But intraday, you wouldn't be loading up on longs. Um, well, you're crazy too. Anyway, even if you, and I think if you did now, you got very lucky, or you've done it. This is the second time round, and you've done it. With the market that when it originally sold off, paused, bounced, and then sold off even further. Um, so what I'm saying is most of the fuel would be built up on the downside. Um, so you've got, I mean, looking at the action, it's obvious now. This is from the open today that it was a short squeeze. I mean, if it wasn't a short squeeze, people should be buying it. People should be enthusiastic. The problem is that they're not, and there was because of all that fuel. It wasn't hard for a few traders to sort of, I'm not say get together, but a few bigger traders to realize what's going on and start pushing the market in one direction and trigger. And they know what they're triggering. And some of the volumes you look on some of the stocks weren't massive, but it was heading higher. There's a one-way action on the Friday afternoon, and then we got a pop of about 130 points. Oh God, I was short that. How great's that? I was short that, by the way. Not now. That's a spy. Um, so it's all one-way action coming into the close, which means that the ETFs, and we know people buy them, the ETFs become very popular, but they've got to sweep the market. If they can't get the volume out, which they generally can't when it's quite high, during the session, or they're chasing it, they've got to match it off. So you're getting all this sweep up of about 130 points in the close, in the match, sorry. And that was massive. That was a massive pop. And that was just everyone sort of, I guess, from the run up, getting caught, not being part of it, and having to, funds and things just having to get something to match, and ETFs having to get it or level out, or what do you call it, balance their books into the match, getting the pop. But I mean, I took some on the long side on the SPY, but next to nothing from what happened. And I think I was just speaking about this stream we did earlier. I did earlier on how I traded it. I just did not expect that rally. Was thinking there's going to be a short squeeze, but I did not expect the rally that came about. If I can find it, it was in here. It was in here. I got this first pop, I think. Watched that, and I just didn't get back in. Or did I get this first one? I can't remember. I think I got this one here once it consolidated. So, we know from that action, you can see it's getting soaked up all day. And then we got this push up here. The first reaction low was getting soaked up again, and then it consolidated, and then off we go. So you've got to realize what sort of price action is happening, and you've got to have in the back of your mind, if the market goes, it can go either way, obviously, but which is going to be the most pain for the most people? And that's generally what's happening. And that's I sort of live and die by that a bit. What's going to create the most pain for the most traders? Because if that's the case, if you live by that, then where are people going to get caught? Where's it going to push? Where's going to be opportunity on the back of that? And what do you want to see to dive into that opportunity? I mean, at the moment, don't forget, if you're intraday trading, whether it's stocks, SPY futures, or anything like that, it's hard going because it's very whippy. So it's kind of like you've got to be in the right spot, and you've got to understand your price action and what's happening, and when, if it starts to go, what's the difference between a bit of a pop or the market actually rallying hard. And I'll show you that in just a second. So when there's this kind of thing, you get this couple of spikes up here just into these highs, and then it goes sideways for a while. I mean, if you bought that spike up, you had to either hold it or your stop's quite wide. You could have got stopped out. You might have taken yourself out before the actual real run got underway. Now this consolidation, after this, after this soaking up at this low, that makes sense just here. Once we popped and we went sideways, the longer it went sideways, the more that I thought this thing's going to go. This thing's going to go. Obviously didn't expect it to keep going all the way into the close, but it was madness. It really was madness watching that and not being a part of it when you were a part of it in the beginning. So, I mean, this is sort of always saying buying in the unknown and selling in the known, or vice versa, selling in the unknown and buying in the known. I managed to do it fine, but trying to keep a hold of those gains or trying to stay on board something when you're so used to nothing like that move, it's really hard going. You've got to just remember the volatility and all that sort of stuff. But long story short, that there was getting set up all day, and you could see off this key level overnight, it got held up, come back down, retest those lows, and started getting held up again. And you got so much evidence saying it's getting soaked up here, pop, getting soaked up here, getting soaked up, and then sure enough, into the close, it started squeezing out. So any shorts that have built up here got squeezed out. Any shorts from overnight, squeezed out. All these sorts of things. It's just fuel that keeps getting built up, heading one way, looking at for just continuation. They're either bearish or, people just don't believe it's just Armageddon and all that sort of stuff. Even though it could be Armageddon, there's going to be opportunities on the upside without doubt. Oh, I'm just seeing that chart again. I'm killing myself. Anyway, not to worry. So we'll just go over the action for today. I mean, there's a lot of setups for today even. I mean, it's just trying to keep yourself in the mentality of, like I said, what's going to create the most gain for the most traders, the most pain for the most traders, where the potential opportunity for a squeeze, what could happen. You saw the same thing if we just go back to this picture. This is US into the close. The market's heading down. I think the market was down into the open. You got this flush lower just after the US stock market open, and that's just squeezing out a few longs that have built up during the overnight session and futures markets squeezing people out because it's gapped up because of the positivity. It's the same hammer the open, the retail clients. And it's the same today. People would have been buying into the close on Friday, thinking, "Oh, we're legends, buy the open," and then, buy the close on Friday night, Friday afternoon, thinking this is it. This is the floor. All that stimulus is going to work. All that stimulus is going to work, and then they're going to do more on the weekend. And la-di-da, we picked the bottom. Sure enough, they've been squeezed out of the market. With the market kept heading south on the open, and all the news didn't help, I guess, over the weekend. But there was enough fuel there to push it back down. So same sort of thing here on the US Open. The market was heading higher. It's gapped up on the open. That was dragged in a few retails and then turned around and squeezed them back out again. Or at least, if you're not running, it's the people late to the trend that get hurt the most. And late to the trend meaning they don't give themselves much room to move. They get caught out a lot easier. This chart here, I think, is a 5-minute chart, Lauren. This is the Dow. So this is the Dow from the action from this morning. but it was capturing the close on Saturday night. Sorry, early hours of Saturday morning, so Friday night in the US. But the other chart on the SPYs, I think it's a 1 minute chart. But you can see that flush in the open, and it started to build, and it went all the way back up pretty much to where it was trading overnight. But then once you got this secondary push lower, and you can see this big green candle here, it popped up. That's a bit of a heads up. Okay, what's happening? Because if there's any weakness, and especially after what Asian market did and everything, if there's any weakness, it should have kept going, but it didn't. It was getting soaked up here. And what you got is a rally back up to the previous high. If anyone can see my mouse back here, this rally up here, then got smacked down. Now, these kind of action too, you got to remember, that drags in more sellers because they see it go, they're quick, they want to jump in, they think it's going, it's heading south, it's going to get pummeled again, and all the market does, flush out this level, finishes back above it. I mean, if you were short in here, if you were getting short in here and you saw this flush and then basically reclaim above that level, you want to be out, because that there is a big setup for a short squeeze, in my opinion. You've got all these shorts building up in here. They've seen it pop down. They've seen it come back and fail just below that level, and it'll finish below the level lots of times. And if it does, if it ever finishes or just doesn't reach that level by a few points, and it starts to hammer down and you get this flush on the downside, then just be careful that it's not going to retrace on you. And sure enough, I mean, it's all hindsight, I realize that, but these are the things that add up when you're watching this price action, that add up to thinking, oh, there's enough here that could be another squeeze into the close. And we saw it happen in the US. Sorry, we saw it happen in Australia. Massive short squeeze in the close. All these sorts of things. And sure enough, it's gapped back down today. And then, people have been cleaned up on the downside. So for me today, I mean, it's similar type of action. I'm looking for that squeeze. Now, I did sell it in here and ended up getting stopped out. I was really late to the party. I couldn't help myself, it really was a stupid trade. But what I was looking for, the similar type of thing, once the market's opening, you got all these people who built long into Friday night's close, Friday afternoon's close, that are going to be feeling pressure, and it's that mentality. Oh no, here we go again. I'm going to get the markets. It's going to melt down, and I'm long again. I've been long a few times. I'm getting it stopped out again, and they just bail. They run for cover, and that's what can happen all the time. They'll flush retail and then start to build. So what you saw is that push down here. I mean, admittedly, I got short, got stopped out. It bounced. I think I went short again because I was still looking for another retest of those lows. I went short again. I was actually up okay for a while, and then bang, I think I got stopped out on this one a second time. And then all was looking good, because from there I was just a bit more patient. I saw this flush, and this was exactly the opposite of what we just said, a flush on the lows. If you can see that little flush, I'll draw it up. This little flush there of that previous high, and then we started to fail. We got this minor lower high here, and I thought, okay, I'll jump in short. It was looking okay, and then it retraced on me. So I actually, again, that was close to being the third stop out, but I took a small gain on that one, and then flipped and went long here, because by then, if that's a flush out and it starts getting soaked up, and you've got this trend still looking like it's holding higher levels, then I want out, because I think there's going to be there's a whole lot of shorts that were built up because of the weekend, looking potentially everything going to capitulate again, and they're going to get squeezed now. So you just got to bear in mind who's going to be what, and where they're going to be loaded long or short, and what's the potential. And now if we see this strength in buying and it's starting to hold up, I didn't want to be short anymore. That's my third try, and I didn't take my stop out. I didn't get stopped out the third time. I was actually up quite handy, and then someone went bang, 20 points, literally instantly. It popped, set 20 points, and that's enough to get me out of anything. So yeah, I went long here. I didn't sit through that because I think that was before the stream. And then I saw that just kept rocketing. So you can see that was a stops triggered. Whoop. This was just a stop run of this level. Pull back. As soon as you held again, that was a prime entry. If you can get in here, that's nice and early. Even if you got in a bit later, knowing the volatility of the markets, that was a good entry too, because you know that people shorts, they've all got to come back out. And if they held through this and saw this pullback start to hold again, that secondary time they're going to be bailing, and that could lead to some really handy gains. So that was the theory behind that move. And this short just in here, whoops, I don't want that. I want you to do that. You can see, just make that a bit. So if just showing, because I think it's quite interesting for psychology purposes. That was a rally, and we can see that starting to break down. You've had a good rally up here, a pullback, same sort of, at this stage, same sort of theory. If you're buying in here, you got the same, you're looking good, you've been winning, and you're buying again. As soon as you start getting this failure up at previous highs at a lower level, and you start to break down of this trend here, then all of a sudden you've got all these buyers in here, you're going to have to start to get squeezed out of the market. And then you can see through here, someone was trying their damnedest to actually hold it up here. And then I think the Hang Seng opened and started to get sold off as well. And once we got that pop and it went nowhere, I'm looking at this as a lower high, because I'm still looking at the fuel of this rally with this move up here of sooner or later having to get out of the market. And sure enough, I took the short down here, went sideways, I was out, and then bang, it keeps going. So it's hard going at the moment. And I think what I've said before, I'm not willing to give it much room to move either way. So I'm sort of in that mentality at the moment. I think it's been working great, even though I haven't taken massive wins like, 100 point, 200 point gainers, which has been happening, say, on Friday afternoon. I'm still taking 20, 30, 40, 50 on a couple of good trades. And what I'm doing is minimizing anything that I get wrong, which is good. And it's just a matter of, I'm just fast on the trigger, that's all at the moment. And I feel that, like I said, even though I took 20 something points, 30 points out of this rally, 20 or 30 out of this rally, even though I left a lot on the table, that's still quite handy. And I don't want to, because I don't know if this is going to turn into a big sell-off again and start to take out these lows. And I've got 30 points on the upside, it turns around in a 20-point loss, because you're going to have quite a wide stop at the moment. And I figure if I'm in the right area, I should see the payoff quite quickly, if that makes sense, because it shouldn't really look back. And if it's going to squeeze and really put the pressure on, and I've got all my theory right, it should go. And if it's a sign that it doesn't, I'm out. And sometimes, more often, a lot of the time, you're right, but you just got to sit through that first pullback. But anyway, you can see the theory, in here, you're looking for a short squeeze and you're looking for the pop. So not so much in here, I was looking for these longs that built up Friday. Maybe that move down was enough to squeeze them out. Maybe it wasn't, but what I was looking for, as long as the lower high holds, I'm looking for a short, and shorted in here, shorted in here, and shorted here. And it just didn't work out. But the third time, lucky enough, it was enough to go, something's not right, especially after that wash. If you've got a double top or a double bottom, if you're buying off a double bottom and it doesn't look like it's going to hold, bail, because that's a good sign that things should hold. A double bottom should lead to higher prices. And if it looks like it's not, you know that anyone's bought it off a double bottom is going to have to bail. Same with this little inside double top. These high, retest high and fail, you're getting that failure and it doesn't continue. I know that I'm not the only one would be short in here looking for that failure and retest it. We're looking for the test below 5,100, potentially book, 50, 60, 70 points. And it doesn't hold and it doesn't play out. You've got to be quick to get out. And you've got to recognize what's happening with the price action and what could be about to play out. So yeah, the reason behind that was to try and look for a further long squeeze. It didn't play out. That was enough. Essentially, that move down on the open from the open was enough to squeeze out those longs. And then you get that rally coming back into the market, and you're basically flipping it over and looking for the shorts that have been trying to, like myself, trying to short into the market, getting caught, and the squeeze back up, which played out nicely. And then it's just the reverse. So each time you're sort of looking for that failure to go up or that failure to go down. And if it's tried to go up long enough, it has been going up long enough, there's going to be a lot of fuel on the downside and vice versa. Does that make sense? Any questions? Yeah, if you've got anything that you want to pop up, just chuck it in. Wall Street's still in lockdown. The Dow is still in lockdown at the moment. Asia, this is the Hang Seng, I think it was in lockdown coming to the open, and then it's been chopping around, but they seem to be holding up. My MAs are basically a 20 and a 50 EMA, exponential moving averages. So you can use, a 10 and a 30 or whatever. I just think 20 and 50 is what I've used over the years. Seems to work well. I've seen them be finding the right areas with those, along with the stochastics. Stochastics, I've got 1133 at the moment. Well, that's what I always use, but trying to read when that strength is trying to change. So I'm just really trying to trade that momentum. I mean, what we all trying to do is read the momentum at the moment. it's still on the downside. So 1, 3, 5 minute chart. Yeah, I'm looking for a 1 and a 5 minute entries, if that makes sense. 5 minute zone. So if we go back to, where are we here? If you look at this on a 5 minute, you can see here, I was trying to short it in here off the 1, but the 5 was getting soaked up okay, and it was oversold. So it was probably quite aggressive, and it was aggressive here for sure. You can see the stochastics was oversold down here, and we're starting to hold up at a higher level on the 5 minutes. So that's why, I have a tight stop, relatively tight stop. But in here, I was looking for that double top there, and it started to fade. But it was still, don't forget, it was still oversold. So you've got to be conscious where, okay, oversold on the 5, we could easily hold up, and which we did. And if we hold up, I pretty much want to be long. But until that plays out, I'm happy to continue short. Just recognizing what the risk is, and I know the risk is that we could be holding up at a higher level on this 5 minute chart, but I'm executing off the 1, and the 30 minute plays a part as well. But at the moment, even with the 30, if it's pointing up and you're selling into it, you can still make 20 points quite easily because of the volatility. So I tend to not put as much emphasis on the 30 at the moment. But you can see this 5 minute chart, a bit of a flush higher, and then it just drops from there. Does it make sense, Lauren? Yeah, that's the way I'm playing it at the moment. And don't forget, this could be, and this is what I'm looking for now. You can see the grind up, this kind of not parabolic, let's say this harsh move down, generally harsh move up, a retest. This move down hasn't been quite as harsh. That makes sense. So if you're looking at something like this now, there is potential opportunity for, the shorts that built up through here to get squeezed out on the upside. Okay, so I'm not that I'll be trading next. It'll probably happen while we're talking, but let's just keep an eye on that to see if that actually plays out. So what I want to see, especially after 5, I want to see that break up, and it's the same kind of price action which we have always talked about. Potentially that something on the lines of a bit of a pop up breaking this downtrend, and what you'll get is potentially the sellers that are late and they're giving it a bit wider risk because they think it's going all the way back down. They might be the ones that on this first pullback they're still holding, and then they get out in the secondary pullback. There might be some aggressive longs in here once we break through. That's if we do, of course. We could just keep heading south, but I'll be sort of looking at this stage, something like that, a break of this minor anchor to this downtrend. You know that this zone in here, what we're looking for, or the idea behind it, that's a major high low on the 5 minute chart. I'm probably dropping it to the 30 minute chart. This is, push down, big push up, that's your correction up. That's your push down maybe on your 30, and it's starting to hold a higher level on your 30. So all of a sudden, that opens up a trade for a break through these highs, 53.30. Okay. But that's the way I would want to attack that. I mean, I know a lot of you probably don't trade intraday, which is fine. But this sort of price action and the theory behind it and what we've just been discussing, it can apply to your day session, your daily charts on your, as long as you're trading in technicals, it can apply to your technicals on your stocks and bits and pieces, because similar things are happening. And if you wanting to buy and you're seeing it's not coming down the previous low and it's starting to run out of steam and you're desperate to buy because you missed the first run up, the same thing's going to happen. You're going to get this high and low start to build, start to hold. Evidence of it holding is going to drag in buyers that have missed the first run or didn't get the first push higher. Okay, so if anyone that's looking to buy here and you get this starting to fade, and you can see by that move down, the gradient of that move down is not as harsh as what, obviously that's a bit different. That's got smashed on the open. That gradient on the way up is a bit steeper than this move down. This looks a bit more controlled. So there is the potential that if we just measure this out, I just want to do it by this. If we measure that, where was it? Oh, that's not really rare, right? Can we just take that if we can? You can see that high to low, where it consolidated, high to low, it comes in line to where it's pulling up now. So if we match those up, pretty much that's support. So if we can say, I don't know if anyone remembers the terminology, box it up, but if we boxing this up, we've got our high that in between we don't really want to be a part of, but you want to be a part of once it breaks out. And if we can get that first pullback to jump into, and that's where we could be dropping to our 1 minute chart. to look to buy and looking for similar price action on the 1 minute chart, pop up, pull back and go, but it's all going to be part of this move down instead of this move down, if that's making sense. But similar type of processes you're applying to your charts. Maybe it's not going to hold up. We'll soon see. If it doesn't hold up, keeps going down, let's forget about that, but we'll see. So that's probably enough of my ranting. The market, let's take a look at the ASX. I want to get up. We'll have another look. All in all, it's not looking that great. Obviously, I think Australia, we'll go on lockdown sooner or later. I think they're being a bit irresponsible. I don't know what everyone else's views are, but all the other countries, the US left it too late and they started going parabolic on the numbers of infected. They waited probably a bit too long before they went into lockdown. They started shutting the doors. And don't forget, there's a roughly 2 week incubation period. If you leave it too long, every day when it's going up exponential, those numbers go up dramatically. And just one day could mean a hell of a lot more. It's harsh to say, but a hell of a lot more deaths that occur. So I think maybe the US left it too long. Obviously, Trump didn't want to come to terms with the market meltdown, but they may have left it too long. And I'm hoping Australia's not going to do the same thing, because we're starting to look like we're going exponential as well. And if that's the case, we should be going to lockdown fairly quickly, in the way of shutting schools. I don't know what everyone else's views are, but shutting schools, shutting restaurants, all these sorts of things that's happening in the US now. Shutting borders is one thing, but if the virus is already here, it's kind of pointless in my view. You're shutting the borders. That's the way you're going to lock things down. That's not going to work. And all this stimulus that's going on now, I think people don't care just yet, because you still can't quantify. Things are getting worse now. There's no doubt about it. They're getting worse. They're getting worse every day. More countries, there's more infections. The numbers are growing. The deaths are growing. And it's all escalating still. We're putting in measures. Some countries are obviously putting in measures to halt that, to at least slow that peak down or flatten the curve, I think they say. But until something changes with the coronavirus, I don't think any form of stimulus is really going to do too much yet, because it's really hard to quantify. Once things start slowing down, people can start to work on quantifying the damage done to the economy. And what does a lockdown mean? Okay, they can start to project it out. But until then, I don't see, like today, the US dropped rates nearly 1% or 1% to nearly zero. And all that stimulus they threw at the market, 700 billion or something, to free up liquidity. And what did the market do? Bang, got smacked. But the US is still in lockdown at the moment. So they're not trying to get it to bounce. They're just trying to stop the slowdown until something happens with regards to the virus, whether there's a vaccine. I know there's all this talk of vaccine. Maybe there's, when the market slows down on the downside, enough talk of the vaccine that could be coming through, whether it's right or wrong, could start seeing some bulls come out to play. And we don't know that yet. All we could do is look at this market and go, stand aside. And I think it's prudent. I think Lauren and I were talking earlier, probably on the chat, if anyone's on our Discord channel, about bargains and trying to get it. Just remember, the harder it goes down, the more fat in the rally, the potential rally from here. And you're not going to miss out. But for a clear mind and less pain, you'd rather buy it when it's coming up than going down. Because if you're buying now, we don't know where the bottom is. And you could always argue, yeah, it's come off whatever, 20, 30%. Remember the GFC got absolutely 6,700 or 6,800 down to 27. That's 60% or so. I don't know what it is, but it got belted. It more than halved the index. And if you're buying that when we're around 58, with the same sort of mentality of buying that dip, you could be sitting on it. It took you years to get out of that hole. So that's my theory. I would much rather give up some of these gains. And we did the same thing. If I get the ASX up. I don't know if anyone remembers. It was probably here. It was at the start of 2019. Yeah. I'll just talk you through that now. Remember, if anyone that's following, it's the same. We talk about double bottom. Who knows what's going to happen? Lauren, all we know is that it'll show something. And I think this is where we're looking at it. And that was after Christmas, I think. That low was in Yeah. So this low was into Christmas. I don't know if anyone remembers that. This low was into Christmas. That trend was still down pretty much right up until early January, and that bounced there. Now, if you bought it there, great. But who's to say that that wasn't going to head south still, and we were going to get capitulated? Because at that time there was a lot of fear around. Remember that? Remember that sell-off here? It's got smashed down here. Global financial markets were melting down there, and apparently all the news loved it, except for the fact when it turned around on a dime and started to head higher. Now, even though it's Christmas, I was watching it. I wasn't really going to alert anything out, but I was watching this thinking, look, if we start to, there's levels you've got to mark up, and you've got to be wary of what's happening. We could have, if you bought in here, for instance, we could have backed off from this high and head south. It could have been just like we saw previously. There's no reason why any of that action, you can argue in the past, but at that stage, there was no reason why this couldn't have backed off here, taken out that low, and before you know it, we're below 4,000. Okay, I know that's an extremist view, but you've got to have that mentality. I want to be proven. I want the market to prove to me that it's going to go back up again before I buy it. And we gave up, this bounce here, we gave that up. I think we started piling in about this zone once it started breaking up here. Whoops, if I can do that. Once it started breaking up through this high, once it broke through there, to me, that's bounced. It's broken this downtrend. It's had its first potential pullback where it could have fell over and retested these lows, but it didn't. I want to be in. As far as that, that's what I want to be in. So that was the scenario back then. We don't know what the scenario is going to be now. All we can do is sit there and wait. But at this stage, I mean, that's nowhere near as severe as what we're seeing now. That sell-off there, I don't like this because we could get a massive 50% correction. And what's a 50% correction? I'll see if I can do my Fibonacci's. Where are they? Maybe here. Here we go. If this is, just say we've got the low, for instance, 50% Fibo is 60.36. What are we now? 51. So say 1,000 points from here. Who in their right mind? I know that there's going to be people, if we just go bounce from here and go straight back up, we have a 50% Fibonacci retracement of that downtrend. That to me is suggesting we're going a lot lower. It was like the same in the GFC. With the original setup, we had this big bounce, and when I was working, everyone was talking about it. Oh, you've got to be in the market. That's it. It's all over. And sure enough, we turn around and roll over to 2,700. We went, I think, from 58 straight down to 2,700. If my levels are right, give or take 100 points, but in the scheme of things, it's not much. So I would be concerned if I see this V shape and then we start to stall up here. We go from oversold here to overbought, and we're around the 50% mark or somewhere around 6,100 even. It doesn't really matter where, but if we start to get overbought on the, we sort of head back into this, it's not very good, head back into this zone on my stochastics, and we're only trading, say we're trading around there. I can do that again. On the bounce, I know you can make money off that, but I'm guessing if you buy in it here, you're probably bought it all the way down. And when it gets there, you're going to be up and you're going to be spruiking it. And then sure enough, I think if it rolls over, you're not going to be the kind of person that's going to get out. You'll sit there and go, nah, that's all. We're just going to have a little pullback. Every day is just a little pullback until before you know it, we're heading through these lows. So all these sorts of things, and it's going to be hard. If there is this kind of a bounce, it's going to be real hard. It's going to be real hard not to pull the trigger, I think, for a lot of people. But this is the kind of thing, this is what trading is. And if you've seen a lot of setups, I know what I look for. If I see a lot of setups on the upside, when the market's starting to bounce, I might be forced to take them. And if they fit my criteria, I will probably take them. I will start to send alerts out on stocks, look to buy because, it's heading high, it's set up, it's breaking to the upside. That's all good, but I will have in the back of my head, this thing might stop dead in the water. And whether or not they've got a cure for the virus or everything's sorted out, we may not, at that stage, we may not even know what the economic damage is. We're all just guessing it. Once it starts to filter through and it's worse than we expected, bang, this market could head south again. So it'll be, there's interesting times ahead. I don't really want to sit there and buy stocks yet because there's no doubt, you can't argue that's still heading south. If you're saying that's the bottom, it's a 110% guess. There's no other way to say it. You're guessing where the bottom is. At this stage, just look at probably a couple of levels. If we take all this stuff off, just delete all that. How do I delete? There we go. If I'm just looking at purely at levels, which could see some sort of retracement on the upside, yeah, if we start to hold up here, in essence, this could be a higher level, higher low after this big flush on Friday and then bounce. We're heading south. If we start to buy or start to hold around 51, even if it's around 5,000, 5,100, 5,200, we hold around here and start to break up through this zone around 55.30, then there could be a chance to pick up some shares because we could be looking for that bounce. Now, then you're going to run into trouble up here, 59, say 6,000. But don't forget, even though they're fairly close on this chart, it's a matter of 600, 700, or 800 points, if that makes sense. So there's a lot of fat, even to come late. And if you drop down a few charts, a few trades, we're on the daily chart, we're dropping down and trading off the hourly or something like that on the ASX, and we can start to see it getting hold up, and just we preempt the break here, we can have a nice healthy gain, even if it starts to retest here, flush it, and then roll over again because things are still not good. There's enough fat in that rally to make some good money, even if you're on the wrong side. You know, this is still stuck in a downtrend. We could take a bounce. Normally you wouldn't take a bounce, but you can afford to do that because the volatility is so high. So there's a lot of opportunities. I mean, at the moment, I'm just sitting on my hands. I haven't even bothered to look at stocks, to be honest, as in the price action and things like that, because this is not over. And I think if I look at it now and I find a good setup, this thing could just completely capitulate still. And don't forget, if we go back to the weekly, this is what we've been talking about, that uptrend there. It's broken. So what do we want to do about that? We want to just, you don't really want to be part of that on the long side just here, because there's no reason why we could be potentially heading down to retest, and this level's got to hold. But if it's got to hold, it can take a few weeks. If that doesn't hold, we've got levels down here. This is all doomsdayist, but we've never seen these things before. And if you haven't traded the GFC before, trust me, it's not. There's some levels you just got to forget about, and you've got to err on the side of caution, in my view, than be too aggressive, especially with share portfolios, because it's such slow moving, and this movement on the downside could not be over just yet. We don't know. There's too many variables at the moment. What's everyone else's view anyway, rather than me just ranting all the time? Who's in? Who's looking to get in? And who's waiting for confirmation, or who's picking bottoms? Or you could pick a bottom and whatever I said's out the door and it works. That's great. I've always personally tried to keep out of the habit, and I've done it in the past, but train myself not to pick those bottoms, wait for confirmation. Because if I get it right, the more I get it right, the more I rely on it. And you might get it right 5 times, and that 6th time you don't get it right, and it wipes out everything you've just done. You get absolutely crucified. Because if you're training yourself to get used to buying to pick bottoms, I guarantee you won't close out of one, because it's still going to do the same thing it's done before, and it doesn't. If you're picking bottoms here on this pullback, because you've done it here, because you've done it here, because you've done it in the past and it's worked out for you, this time didn't, and that's more than enough to wipe you out. Does that make sense? So that's why I've always tried to steer clear of trying to pick bottoms. And you do cop flack sometimes, but that's the nature of the beast. I'd rather be on the safe side and make some gains when it's going back up, and keep out of these pullbacks, these big pullbacks, than get it right and be able to say, look, I picked the bottom here. I mean, that's completely guesswork. There's no technical reason to buy this just yet. We're still heading south on a daily time frame, the weekly, even intraday doesn't look so great. Where is it intraday? It's still going down. Oh, it's killing me again. So forget about this trade we just spoke about. It hasn't played out, so we'll just forget about that for now. It might still play out. We might still be heading south. That still hasn't opened, has it? We're the only market heading south. We've got Hong Kong is holding up sideways. I think we're just waiting for this, the US Dow and the S&P to open up and get smacked again. And if it doesn't, there's a good move on the upside coming. So what we're just talking about here, does that make sense? I mean, you can trade. I think intraday is probably, for me, most of pretty much everything I've been doing since we closed out our last trade has been intraday on the SPY, on the Hang Seng, on the Dow. It's been intraday. It's been tougher going, but it's profitable. You know, I know I've got chipped around a few times, but that's the nature of it. Win loss strike rate's quite high because you can get it. Like I said, if it's spiked down like that and the momentum's down or the market's heading south, I've been buying it still and making money even though I was wrong because it rolled over and went to new lows because of the volatility, because of what's going on. Um, so there's a lot more opportunities. My strike rate actually on the trades is, I think, look, I'm just guessing. I haven't done the data. Is actually gone up slightly than what it might normally be. So it's, I think, intraday 60 to 65. It might be 70 or above, 70% right. But I'm not getting those big movements. You know, it could be 1 to 1, 1.5 to 1, probably 1.5 to 1 at the moment, which is good, but it's not good considering that I'm on the right side of a lot and not taking advantage of it. But statistically, if I'm increasing my strike rates going up, you know, that's a big benefit. If I'm getting, say, 75% right, I'm on the right side and I'm taking profits 75% of the time, it only takes one to get on the right side of it, and all of a sudden it's gone nuts. It's really good. But at the moment, those statistics are more than enough. If I'm 1.5 to 1, I make 1.5 for every point I lose, and 75% of the time I'm winning 1.5 on average, and the other 25 or maybe 30% I'm losing one. So be it. I'm still making money longer term, and then it could just be a matter of bumping the size up. But even bumping the size up in this market gets a bit hard. So, is there any questions there? Is there anything you want to look at? You got anything you want to have a quick look at, Lawrence? Stocks, anything, Aussie, anything you want? Take your pick. Um, the S&P, that's had a good bounce off that level. We'll have to see how it opens today as to whether it trades lower and breaks down like we are. I mean, the ASX is breaking down at the moment. That weekly trend up has been broken. Whether or not this is a level we could hold and we could bounce, get your fib at 50%, like we said, and then completely capitulate. I don't know what's going to happen yet. I'm not going to guess it though, that's for sure. The DAX, so that's the FTSE's in meltdown too. It's drove straight through that level. So it's a good reason why you never buy off a level. You don't just sit there with a bid in a level because they just plow straight through a lot. It's plowed straight through this one, plowed straight through this one. Absolutely clean people up. The DAX, that's not in an uptrend at the moment. Double top up there, big flush lower. It may want to try to hold at 8,700, but this is a big, it's an exhausted pattern of this move up, and we might be in for a big retracement. Like I said, 50%, and we head south again. We don't know, but if we start to get a big bounce, then without any higher low forming, I'm concerned. Basically, the Dow, that's your longer term, your weekly still. It's holding. If we go into our daily, whoops, not the hourly, daily, it's holding at this stage. We might get smacked down tonight in the US, say, I'm talking smacked down 1,000 points or so, and be back down to 21,680. What would that be? Yeah, that's over 1,000 points, isn't it? 22, that's 1,500 points, say. So a 1,500 point drop tonight, everyone's going to go, the world's ending, and it's still holding up. It could potentially hold an inside level at 21,680. Does that make sense? So even though everyone's is going to be looking at it, because anything with a 1,500 point drop is going to be scary on the Dow, which could potentially happen, it could still longer term be, the early stages of building some sort of base or holding. We don't know yet. So if you're turning completely bearish because of this, just remember what the weekly's doing on the Dow. Ours is a different story, so it's a bit harder. We could be front running what's going to happen in the US. They might capitulate tonight. We don't know. We'll wait and see. So that's it. I don't know what we're saying. DMP. So check out that SPY again. God, that hurts. Always hurts when you're on the right side and took nothing in comparison to what's going on. Just want to clear all this up. Give me a second, Lawrence. Sorry, mate. So let's just Looks a bit slower. They've done a few changes here, and things are just a bit slower, more cumbersome on this program. We could be an inside level starting to gun for around here. But we'll see. And if it holds this inside level and starts to lift, could get a rally into the close again. But that's probably caught a lot of traders that were waiting for that bounce in here. They're buying all the way down and they've just capitulate. All right, so DMP, let's go here. Daily. Holding okay. Potentially. They are trying to get bought. Domino's looks like it's trying to get bought to me, but that's not that sell-off there. Got to remember, when markets go to meltdown mode, throw out, was it rationality or rational trading out the window? Forget about it. And that's what makes forgetting about levels, because it's holding up, and trying to buy off a level without any sort of confirmation and trade more around than what's happening on the ASX. Because if that starts to melt down and Dow goes with it during the day, forget about trying to buy the stock because I'll get pummeled. Well, that's my view anyway. So when things are rational, you get these nice trends. You can look at your levels. You can look at this, that, and the other. You're pure technical trading. When it's irrational and you go into meltdown mode, just be very careful that you're not looking at the other levels and go, looks, it's holding up here. I want to buy. I'll buy it. And then sure enough, Dow drops 2,000, and then you gap down on the open. You close out at a loss, depending on what you're trading, whether you want to hold it longer term. If this was longer term, actually that weekly is not so bad. Longer term, I'd rather let this drop a bit more, to be honest. Just looking at that, if I can get that, let me just get the drawing tool up. I'm guessing you can see what I'm looking at. Hopefully with an area, Laurent, you can. So I'd be happy just to let this one slide for a bit. You can see that's not what I want. Forget about that. Here, there we go. You can see this level through here. It's around the 40 buck mark. You can see the sell-off drove it through. It's bounced back up. So you got this, coming to the end of last year, it bounced up quite strong, and it was going okay right until we got smacked. So this price action here, looking at the weekly, you're right, Lauren. It looks like it's getting held up a bit. I mean, that hasn't got belted as much as a lot of other stocks, a lot of the other stocks that have come under pressure. And if you just start drawing up the weekly chart, look at that. So this is just that same old pattern we look at. That's your downtrend. So the market's coming off, it's bounced, and we're looking for that higher low. So we're looking for something like this on the weekly. And you can obviously break it down to the daily, but yeah. So what you're doing, you're seeing this stochastics come down from overbought to oversold, and potentially we're going to hold up somewhere, and we're going to be looking for that higher low on the weekly. There is that opportunity, I think, and it's broken through this level too. So, there's a few things saying that's consolidation through here. It's broken the top end of that consolidation. This is a pullback. Maybe it's going to be deeper than, because of everything that's happening. It might be deep and it might take a lot more time, but if someone's going to be happy to support it there, let them support it. Let it play out. And if we do get that, even if it's that bounce that we just talked about, a 50% retracement of the move down on the ASX, this one should go. And then that could be a good one for a bounce play and look into the intraday, because we could be heading straight back to 60 this high or even higher. We don't know, and we'll just take it as we come. But keep an eye on that, Lauren. That's weekly doesn't look so bad. I know they've probably had problems, I'm guessing. I don't know the fundamentals of it all, but they've probably had problems that they've worked out, and people were happy with that. Just got caught on this GFC2. But it's not that, in comparison to what's happened in the ASX, it's not bad. Not too bad at all. Realistically, if we go to the ASX and look at that meltdown, and back to Domino's, it's not even a meltdown, really. It doesn't look too bad. Yeah, no, exactly, Lauren. If this one that's holding up, it's showing some really good strength of holding up. What was the other one we had? PTM. No, that's not it. What did we just have? I'll have to go back here, don't I? TPM. I was wrong there. TPM. This one's, to me, on the weekly, is very, very similar. Look at this on the daily. You know, the market got smashed. It's opening lower, washing out, bang. A lot of days, if you can drill into this, a lot of days it's opened down because of the weakness in the market and pushed up, sort of closed on its highs. Even though the candle is, it's heading south, the candles are green. The intraday action's been buying. I think it's been weighted to the buy side by far. And that's not a bad sign. You're going in through a market meltdown, each day's up from open to close has been up. This day not, this day yes, this so far yes, 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 yes. So 1, 2, 3, 4, 5, 6 days, or so far, say 5 days out of 7, the open has been lower than the close in a market that's melting down. So that's got to tell you something, that there is potential strength, that if the market bounces, yeah, you're right, a bit of a high priority one, this one. And it's because of that weekly, that trend, and they come out some good news. But we just want it to set up, because we could be buying that, going, oh, we're going to get that pop in the ASX, and we don't get the pop in the ASX, and we melt down to 2,500, below 3,000. I'd pretty much be 99% sure that will be down for us, if that makes sense. So yeah, you're just looking for that strength to come back in, the strength of the overall market. Because at the moment, like I said, it's irrational trading that's pushing the market. It's not rationality. All right, what else? Yeah, A2M. Yeah, I'm not a big fan of that one, to be honest, because of this weekly. If it breaks down through here, which it could do, that could be a key lower high. If we just draw that up, you can see the difference in this one. I just want to take a step back. Where are we? This on the weekly, hard sell down, found a base, spike up, kept selling down. Like, this was a bit more controlled than obviously that sell off. Held a higher level, and we're starting to curve back up. So that's cup and handle, big cup and handle over the period of a year. But that holding through here above 6 was a higher low compared to 5, and we're starting to lift. So that's a bit of a heads up where this is curving up nicely. So it's the sort of the shocks to the downside have been soaked up, and now it's getting buoyed. Whereas to me, the shocks are to the upside. I don't like seeing something like that, and then the weight coming in, especially up to near that high. I'd rather see accumulation somewhere, and it hasn't really been. And so to me, that it's sort of gone too hard on that upside there. Was it 1350? Am I wrong? A2M, let's just go. Yep, 14, 13. So to me, it's more of, if that can hold here and it can bounce off there, and you're looking at the lower time frames, yeah, maybe it could work out, especially if we get a flush like this. But to me, that was in contraction mode. Run up, contraction, run up. This is not really contraction. That's just a sell-off, and I'm not so confident with that. So this high could still be in play. Any sort of move up there, we get some selling. Potentially that is playing out here. We could get a lower high. Look at the stochastics. If we hold up here and the stochastics keeps coming off, even if it's just around 50, there's a chance that this could bounce. I mean, maybe, maybe not. I just don't like that action compared to what we just spoke about on TPM. Does that make sense? And apart from that, I'm not seeing a lot of love in this market. Still going down, killing me. We're not liking this. And don't forget, there's going to be RBA. I don't know if everyone saw that RBA stimulus potentially announced on Friday, or Thursday, further stimulus, which could, I mean, we'll just have to wait and see what it does, but it could provide some support. Anyway, if there's anything else you want to quickly go over, otherwise we'll just we'll call it a day there. I'm getting all talked out. All right. No go. Alrighty, guys. Look, we'll finish up there. Um, all the best. Like I said, if you've got any questions, anything you want help on, if you've got any concerns, I mean, don't feel shy. Feel free to send us an email to support@tradesetup.com.au, and I'll be more than happy to help you out. I've got a bit of free time on my hands. Anyway, not so much with this equity market. So, yeah, feel free to give me a call or just shoot us an email. Yeah, even if you're having a few issues, just shoot us that email, and I'll be happy to get back to you, see if we can help out. Otherwise, have a good day, and we'll speak to you again on Monday for the stream. And I will be doing some bits and pieces each morning, only for a shorter period. It's gone for about 25 minutes today, but it should be around the 10 or 15 mark. Yeah, quick rundown of the market. So, especially with the volatility around at the moment. Yeah, guys, thanks for joining me, and I'll speak to you again soon. Bye.